Noon, everybody. Uneducated Economist here. So in this video, we are going to be talking about the real economic hell that most people are going to be facing. Now, this is something that I have been sharing on this channel for quite some time, and that is showing the evidence of how it is that the separation between the rich and the poor is growing exponentially, and that's probably going to be the case going into the future. Like, I cannot see anything out there that's going to be reversing the inequality that we are now facing, and the problems that are going to come into the future are going to get far worse than what we are experiencing now. So to understand the problem and face that problem head on and to own it for yourself is the only way that we can really deal with the economic hell that we are going to be facing going into the future. Understanding that new money comes into the system and how that new money comes into the system is ultimately what's creating the problems that we are now facing. Knowing that the new money is going to continue pouring into the system is going to continue to separate the rich from the poor, and there's no better evidence of that than within the real estate market. Now, there's two things to look at when it comes to real estate: the new construction market and high-end luxury homes. Now, when you look at these two particular sections, right, new construction market, this is where the bulk, what I believe the bulk of American manufacturing can be observed. You think about it, new construction of a building is a 100% or pretty much 100% American or a domestically made product, domestic labor, domestic construction materials. It stays domestic. Like, everything about it is domestic. Financing is domestic. So there is some components that come from foreign production, but the majority of it is right here in the United States, especially when you think about the new construction of a residential home. When you see this slowing down dramatically, then you know that there is bad times taking place within the economy. And now this is for the general population, for the working class individual. But if you go and you look at luxurious homes and the sales of those homes, that is actually increasing while the rest of the real estate market is decreasing. And as far as activity goes, the luxurious homes are increasing. This is a sign of the times. This is where the money is being spent. It's being spent by the upper household incomes. This is where the economy is now focused, not necessarily like our economy, but the economy that people are looking at as far as the government numbers, the financial system. Everything is focused in on consumers. And now the consumer is the top household income. See, bottom 80% of people are really no longer the major consumer within the economy. Typically, the Federal Reserve would try and spark the aggregate demand through lowering of interest rates, would eventually move into hiring, and that extra hiring of people and all that extra labor going back to work started creating more money that could be spent within the economy. And this is where the consumer was found. But that isn't the case anymore. It isn't found like that like it once was. See, nowadays the consumer is found up at the upper household incomes, and it's not necessarily increasing their income, but increasing the asset value of their portfolios. See, now this is really where the stimulating effect comes from. How many people down in the working class individuals have a lot of assets? Not a lot. Like, they might have a 401k, they may be buying into a house, but for the most part, they're not loaded up on assets like stocks, bonds, commodities like silver and gold, even Bitcoin for that sense. It's not in the working class hands, it's in the upper household incomes. They're the ones who have it. So now when I think about some of the situations we are now facing right now, as people say, oh man, there's an inevitable collapse coming to the stock market or to real estate market or to something of that nature. And I'm thinking to myself, that might have been the case when the average everyday person was participating in those particular markets, but it's not them anymore, right? They're not the ones who are involved in it as they once were. Now it's the upper households who are the ones who are mostly involved in it. You have to think, like, when I graduated high school, the internet was just getting really popular. I graduated in 1995, right? So the internet had already existed, right? There was plenty of websites out there, but they weren't as popular as it is today. And the idea of like stock trading was just coming into the average person's capabilities, like E-Trade accounts and stuff. There were $10 purchases to get in, $10 to get out. So even at that sense, if you were like an individual person, like, a working class guy, 25 years old, trying to figure out how it is that you can participate in the stock market, you really didn't have access to it even then, even at such a low commission trade of $10. I mean, you think about it, $10 to get in, $10 to get out, $100 is 10%. You have to have a 20% return just to even break even on it. It wasn't really accessible to the average person. You had to put in a lot more money. But nowadays with Cash App and Robinhood and all the other online brokers, you can buy a fraction of a stock all the way down to just even $5. Like you can just spend $5 buying stocks once a week. This is now access that we never had before, right? So in the early days when it was first starting, it wasn't like it was available to everybody, but as that started to grow, it became more and more popular. And so what you ended up finding is things like during the great financial or during the dot-com boom, people who never had access to that capability before were dumping money into it, not having any idea of what they were really doing. And then when the dot-com bust took place, so many average people who should never have been participating in the market to begin with because they really didn't have any idea of what was going on. They just saw it going up and up and up and thought, hey man, if I could just buy any stock that has .com at the end of it, I'm going to be kicking ass. They found that they lost all kinds of money and revenue within that. Nowadays, here you have something of the similar effect taking place within Cash App or Robinhood or some of these other ones, but the amount that the working class individual has to be able to deploy into that is so much smaller. You think about it, people live in more and more paycheck to paycheck. That doesn't give them a whole lot of excess currency to deploy into that thing. See, back in the day, there was a lot more people who were not living paycheck to paycheck who had excess money that they could deploy into it. Well, that people is shrinking more and more every single minute of every day. So now, although they could be deploying money into there, they really don't have excess liquidity to do that with, not like they did back in the day. I don't know if anybody's following this, but ultimately, the further we go down the line, the more and more people are living paycheck to paycheck, meaning that they have no position in order to acquire assets. Like they have less and less of that capabilities to them. When they have less and less capabilities to them, the market volatility of those weak hands getting in and out is becoming less and less. Now, don't get me wrong. There are more people who have the ability to get into the market, but they do not have the money, not like the upper households do. And this is a major difference. It's not easily observed. You have to recognize it over time. You have to recognize that back then there was a lot more people working their day jobs and had the ability to acquire the things that they needed in their life because a day job would have been enough. Today, a good job sucks. It's not enough. So even though you have a good job, even though it should be easy for us to acquire assets, it's very difficult right now because so much of our paycheck has to go to our living expenses. And this is the unfortunate consequences of what we live now in the timing of what we live today. This is how the wedge gets driven ever more with every single passing day. The asset prices continue to go up, but very few people in the working class individuals have enough of those assets to make a difference to them when those things start to go up. It makes it ever more difficult for them to acquire the things that they need in order to survive. And their paychecks be buying less and less gives them less of an option to move into those assets. And this is going to continue going, and this is why it's going to be exponentially worse. It's going to continue to drive the wedge. It's going to make it so that people are going to pull their hair out wondering what it is that they need to do in order to achieve that American dream, not realizing that it has been eliminated. It is not there anymore. There was a time when we were a manufacturing powerhouse, you could have had a good manufacturing job. And with that good manufacturing job, you could have deployed those things out there to the world and the world would have sent us their money. And by doing that, we were able to raise our standard of living. This is a very easy concept to wrap your head around on why it occurred. What is very difficult is what happened to it. Why did it go away? And so when we start to understand that once you raise your standard of living and you increase your consumption, and those products that you are buying are now starting to cost more money because of that added consumption and the supply demand imbalances that occur from it, you will start to recognize why it is foreign production comes in and domestic manufacturers leave. The more this happens, this situation of buying into foreign production so that we can have our elevated standard, our standard of living, and have that luxurious experience, the more we do that, the more of a situation we are going to find where it becomes very difficult for the working class individual to make it. They just won't, they just will have it harder and harder and harder. And there's really nothing that any government or bank can do. Like, there's all kinds of people out there who will have suggestions of it, but those suggestions are very illogical when it comes to human nature. Like, humans don't want to give up their hard work. They don't want to say, oh man, I worked my entire life so that I could acquire all these assets so that I could live a comfortable life and enjoy the higher standard of living. Are they just going to relinquish that voluntarily? Say, oh man, I don't like, yeah, I worked real hard to get to this position, but you know what? Never mind, here, you can have it back. Does that sound reasonable? Of course not. Nobody's going to do that. And so when I see people down at the down in the comment section who are suffering in as far as being one of the working class citizens and having a difficult time trying to figure out how to get their paycheck there, they hope and wish and dream that the rich, greedy corporations and governments would do something. And that right there, that something, is the reason why we are suffering through the consequences that we are. Because the something that they're expecting them to do, the government, the banks, or whatever, is going to drive ever increasing amounts of more money into the system, because there is nothing else that they can do. They can either do nothing or they can do something. And if they do nothing, that means less money. And if they do something, that means there's more money going into the system. If you inject more money into the system, you'll have ever increasing amounts of separation between the rich and the poor. All right, continuing on. Tom, wife and I are setting a record 22 days now, no eating out or take home food from restaurants. Hey, that's good for you, Tom. That's actually a great way to go, because especially those who like to eat out a couple of times a week, if you were to not eat out a couple of times a week, and you'd be amazed on how much money you would actually save, and then you could put that money towards the S&P 500, or put it towards bonds, or put it towards gold and silver or Bitcoin, or put it into your house in the real estate and fixing up your house or something of that nature, knowing that you have to do something yourself, have to position yourself into an asset or a location in which that is going to grow over time or have some sort of return, right? That it has to be within the awareness of the people, in their constant thought. If they are not moving in that direction, they're most likely going to end up on the bottom side of the wedge. I mean, how many times have you heard somebody say, oh man, I'm saving up so I could take that awesome vacation? And it was just like, are you putting money towards any kind of asset in the meantime? Like, I understand you want to save up for the vacation, but are you also saving in silver and gold and Bitcoin and in stocks and bonds and real estate and all the other stuff? Because if you're only saving for the vacation, you're going to end up on the bottom side of the wedge. That's all there is to it. Right? Because there's nothing else that can happen. There's no day job out there that you can work that is going to be enough for all that stuff. Like, you can be incredibly disciplined with your day job, and you might be able to make it happen, but you're going to have to be very focused on what it is that's going on, especially within your paycheck, how it is you're conducting yourself, the emergencies that you are going to have to face going into the future, because there's always things that come up. If you are able to handle those things, a day job might be enough, but for the most part, most people are going to have to work more than that. They're going to have to work their day job, side hustles, extra jobs, whatever it is, and then they have to be incredibly disciplined on top of that. Usually eat out on Fridays because I work so late. Made eggs this Friday, $50 saved. Myron says tariffs are increasing government revenue and saving, which increase the supply of loanable funds, pushing down R-star. Yeah, but see, Myron is also in a position in which that like, Myron is talking, he's not in a position. He is in a position. He is talking about a position that these tariffs are collecting a revenue. What happens when the Supreme Court, if the Supreme Court deems these things illegal, then the exact opposite is going to happen. Now, wait and see. We'll find out. Maybe the tariffs do bring in some sort of revenue. Everybody's going to be super happy with stimulus checks that they get from it. And the farmers get subsidized, and everybody's going to be singing kumbaya on these things until the tariffs need to be increased. Ever increasing amounts of government intervention, right? Because those farmers, even though they get subsidized from the government for their soybeans that aren't selling, why would you be a farmer growing a product that nobody wants? Like, I don't care how much government subsidies come in, like that, there's no point in that. Because the free market forces are saying you're failing. You're going to have ever increasing amounts of government intervention. Tariffs are signs of that. Tariffs are a symptom of the failure of not the government, of the economy. And not necessarily the failure of the economy, it's the cycle in which that we are in. Like if you have domestic manufacturers who are like, hey man, you guys are too expensive to produce in this country. We're going to have to go find a different country to produce in. And then you start inflicting tariffs and government subsidies and all that into it. You're going to have to do that ever increasing amount every single year in order to keep those manufacturers here. It's just the way it's going to end up going down. So it's just a matter of time. It's a symptom of the failure is really what it is. All right. Just heard about infinite money glitch between Nvidia and OpenAI Oracle. Interesting. All right. 125,500 per coin right now. Yeah, it is. It's so good to watch. Currently in Mexico with Montezuma's revenge. Bummer. Reminder that health is the greatest investment. Don't take it for granted. Man, isn't that the truth? Learn to cook real dinner. Yeah, that's for sure. My wife cooks pretty much all the meals. So tech now makes up more than 50% of the stock market. When this AI bubble pops, this is going to get really bad. Yeah, and that's kind of the interesting thing. Like everybody's anticipating this AI bubble pop coming. Like, I mean, I'm almost assuming that it would be like a .com bubble pop or something of that nature. And I really honestly don't know how I'm positioned that would be seriously affected by that. Like, I can see where maybe like, some of the stock market or some of the things that I hold, but for the most part, like I'm not positioned so much in one particular area that it would end up doing any kind of real harm. So I mean, like, it would be painful, but it wouldn't destroy me. That's where I think like diversify it into so many different areas, like whether or not you're in silver or gold to be out of that third party claim, or if you're into, the real estate market, because, obviously that's where the best place to go to if you're ever going to want to make it rich, because essentially that's where all the rich people I know have positioned themselves. It really comes down to, your risk tolerance, and then also your understanding of where it is that you position yourself inside of it. Like if this starts to collapse, am I okay in other areas to protect myself? I mean, at least pay the bills until the recovery takes place, or that position is alleviated somehow, whether I eventually sell out of it or whatever. Is there other places that I have positioned myself so that it doesn't have the same impact if that was to be hit? And I think that's important. Like a lot of times people are like, oh, dude, your Bitcoin's going to go and then you're going to be crying. And I'm like, well, maybe for the Bitcoin position, which happens to be quite big inside of what it is that I hold, as far as the overall portfolio. But I got so many other things going on out there that, really it would be a painful experience, but it wouldn't devastate me, and I think that's the key to it all, is that if any one of the positions completely fails, will it devastate you? Will your life completely change, or will it just be irritating, frustrating, and you're able to overcome it? Like that's a huge difference inside of that. All right, what time is it? Alrighty guys, I got a few more minutes here and then I gotta go. Hold on, I just got a message. Let me check that. All right. It's just work asking me to call. All right. Already racked up $2,000 on my credit card because I heard about the 2000 stimulus check coming. Yeah, I wonder how many people did. Anyway, to save American farmers. Not really. Like there, if you can, there, yeah, like if you can produce enough that the amount that you're producing, such a bulk amount of it, that it is now something that you can sell cheap enough to compete against other farmers out there. But the problem is that the United States, even this, the individual person requires a lot of money to have their standard of living. So even though you might have a farmer who has all the right technology and everything going to give them the best yield, because they need to earn such a profit off of it to pay all the rest of the employees and the laborers, the equipment, the lease, the land, all the stuff that goes with it, it doesn't give them a whole lot of room for profit margin inside of it. So yes, it's a big farm. Yes, it's new equipment. Yes, they get paid a lot of money, but the profit margin itself is very narrow. So if there's any kind of global drop in the price, it makes it very hard for them to compete. Now, what would happen that would cause the market price to drop? Well, you have a major customer like China say, hey, we're not going to buy it. We'll just suffer the consequences of not buying it from you and buying it from other places out there. And so when you have a situation like that, all of a sudden sales drop and you have this overwhelming amount of product out there that needs to sell. How do you compete? Like, what do you do with it? Why did you even produce it? You might as well just burn it, set it on fire. Right? And now this is the unfortunate consequences. Like, how is it that you're going to be able to get this American farmer to be able to produce that with a bigger profit margin, considering all the expenses that go into it when you go overseas? And these farmers over there are working in the most primitive of conditions, just now advancing their technologies, be able to produce what it is that they have out there at a far cheaper pace because they don't need as much profit in those foreign nations. It's just like any other manufacturing product out there. If the foreign producer can do it so much cheaper than you can, there's nothing that can save you. It's just nothing that can save you. You'd have to ever increasing amounts of government intervention, subsidies, tariffs, and that's proof of the failure that is happening because that is a symptom of underlying economic forces making the situation impossible for the manufacturer here in the United States. And the government has to do something in order to continue to keep the operations here. There's no saving it. Like, it takes ever increasing amounts of intervention. And then eventually they just give up. All right. Buy land and give it to a farmer. It doesn't matter. Even if you give it to the farmer, he has to be able to produce it at a rate that is cheap enough to compete against the globe and profit for themselves. And because they most likely want to live in a house and drive a truck and send their kids to college, it's too much. It costs too much for them to do it and to have that standard of living. So they just don't do it because that guy over there in that other foreign land can do it so much cheaper. All right. The internet was coming before the dot-com bubble popped. Okay. Hey, P. Morton, thank you so much for the $10. I really appreciate it. Let me get my glasses. All right. You said what was needed. I had changed the way I lived my life several times to get to where I am at 50. Those farmers suck. They need to do better. Huh. I don't know. They need to do better. I mean, what is it that you like? I appreciate the $10, but I'm not sure exactly what it is that they need to do in order to do better. Like, you can only invest into so much, like, you lease so much land, lease so much equipment, hire so much labor to try and produce as much as you possibly can at the cheapest, rate that you can possibly do it. And eventually you get to a point where it's just not profitable, right? You just like, no matter what you do, the interest payment on it, the lease payment, all the other stuff that goes with it says, man, all this time and effort and energy and financing that I put into this is not as profitable, does not produce the profit margin compared to the global price that farmer over there in that foreign land is doing so much cheaper than I can do. Like, they don't live in a fancy house, they live in a hut, right? Like that's the type of a difference inside of it. And the only thing that would really give us any kind of advantage is that we already have an established shipping channel. So if you have an established shipping channel, you can get your product, even though you make it's more expensive on your production side. But if you can transport it cheaper or more efficiently than anybody else out there, then you can still compete. But once you lose the shipping channel, once you lose the partnership there, it's over. There ain't nothing that'll save you. All right. Farmers want life for free. My life has never been free. I don't know about that. Farmers want a life for free. I mean, I don't know anybody. Like I've known quite a few farmers. Like my family's from Wisconsin. There's huge dairy farms, up in that area, and they all work incredibly hard. And I don't remember them having like some luxurious lifestyle. Like they had a lot of land, they had a decent house, they had plenty to eat, they had a lot of equipment and stuff like that, but it didn't appear to be luxurious experience considering the sheer amount of time that they had to spend there dedicated to those cows. Like they couldn't leave. Like they couldn't leave the cows ever. They couldn't go anywhere. Twice a day they needed to deal with those cows, and there was nothing that they could do to say, hey, I'm going to take a day off. It doesn't work like that. Those cows don't take a day off. Those cows need to be milked twice a day, right, or whatever it was. And they were essentially tied to that farm their entire life because of that. I don't think that's a luxurious experience. Like a luxurious experience is freedom, right? Where you get to leave, you get to do whatever you want. I don't care how much money you make. If you're stuck there because you are obligated to deal with it, that's far from free, right? That's far from being free. Oops, stay there. Come back here, guys. There you go. Okay. All right. Farming isn't free. It's much about its honest work, yeah? Farming and ranching is more a way of life than a job. Yeah, I would agree with that. Most farmers I knew were broke, never went on vacations, and always looked dirty. America is screwed, can't make anything here anymore competitive. Yeah, not competitively, right? Farmers business strategy, incorporate as a nonprofit church, get tax exemption status, housing allowance, many more deductions. I remember driving through Nebraska, beautiful farmhouses. All right, I got like a couple more minutes here, guys, and I got to call it quits. But thank you for joining in. We got 235 people watching with 68 thumbs up. Thank you so much for hitting that thumbs up button. Continue to hit it while you're here on the live stream by hitting that thumbs up button. The YouTube algorithm will grab this video and spread it around for more people to see. And it's a great way to support the Uneducated Economist. Good day, UE. Well, thank you, John. I really appreciate you being here. What will happen with soft lumber with the situation with Canada? Nothing. I don't see anything happening with lumber outside of the tariffs are not going to have a major impact. The duties are not going to have a major impact. The Trump pissing them off ain't going to, like, none of that stuff is going to have the impact. What's going to have an impact is a credible threat that is well announced, publicized, and internalized into the people's thought, which will then force them to start driving the prices up, only to realize that the reality of the situation is not what they think it is. That's what's going to move the lumber prices, or an increase in demand. Now, the increase in demand is going to come from home builders. When home builders sentiment turns positive on buyer traffic, and I don't know how many times I've said this, like this is the only thing that you really need to know if you are looking for lumber prices to move. This is it. Home builder sentiment on buyer traffic going positive. That little tiny little piece of information. Home builders sentiment on buyers traffic. When that turns positive, it's on. You will see lumber prices going through the roof. Now, how far out? What will it take? Exactly when? I couldn't tell you that part, right? I mean, it's going to happen at some point in the future that you will see the home builder sentiment on buyer traffic turning positive. And when it does, lumber will shoot up. Until then, all the rest of it is just pure noise. It will not really drive the prices any one direction or another, right? You might see some futures change, on markets when they get the news out or something, kind of develops out there that kind of scares them. But the reality of the situation is lumber is really cheap. The futures are cheaper than they were back in 2018. Mill curtailments are incredibly prevalent right now within the system, meaning that inventory levels are dropping. They are going to be persistent going into the future, guaranteed for the rest of the year that there's going to be a slowdown in production coming from the mills, the lumber mills out there. This depletion in inventory will eventually be matched by the demand coming from the home builders when buyer traffic turns positive and lumber prices will start to shoot up, right? But until then, it's not going to happen. I don't care what happens with the news, with the tariffs, with the Canadians, with all that other stuff. It doesn't matter, right? I mean, it'll have some impact. It will have some impact. But if you're looking for the major move, that will take place when home builder sentiment turns positive on buyer traffic. When that takes place, it's on. All right. Local gold and silver stores say they are getting more sellers than buyers now with high prices. That's pretty interesting. I'm going to answer this last one here, and then we're going to call it quits because that was from Vape King. Thank you so much, Vape King, for the comment. I had another buddy of mine tell me that his silver supplier was saying the exact same thing, that all these people, like basically the way he put it, like poor people, were showing up with their silver to sell it, right? Get their money out of it. $50 an ounce, that's pretty high. So if you have some silver, getting your money out of it at this point would be like the first time you've ever been able to really get top dollar for it at this all-time high. Now, $50, we're not quite there yet, but this is essentially it, right? This is the all-time high. Now, when I think about it, rich people probably aren't selling their silver. Poor people are selling their silver. So think about the concentration of wealth that happens with a limited asset like silver. Like there's only so much of it out there. And if the poor are giving it up to get the top dollar for it right now, where is it moving to? Right? It's moving into the hands of a few. Even though it is expensive right now, that's the direction it's going to go. All of a sudden, all this silver is going to come out of the woodwork, come out of the dresser drawers, come out of wherever, the paint can out of the garage, the hole in the ground out in the backyard, wherever it was that it was stashed. It's all going to start coming out of there and start flowing into the hands of a few. Okay? The redistribution took place when it was cheap, but only a few people were jumping into it at the time. Now those few people are going to let it concentrate back into the hands of a few again. No buyers, all sellers. Well, if they're all sellers, that means there's very few buyers. Is getting concentrated right now. Alrighty, guys. I have got to go. I'm sure of it now. What time is it? Yep. Alrighty. You guys are awesome. Thank you so much for being here. Thank you for hitting that thumbs up button. We got 80 people now who have hit the thumbs up button, with 248 people watching and $10 in super chats, because you guys are always so supportive of the Uneducated Economist. I can never thank you enough. Uneducated Economist. You guys let me know.